Hello, welcome back to this week's market update. Today is Tuesday, September 2nd, 2025, and we will jump right in. Looking at last week's market performance, US stocks notched new highs on Thursday, specifically the S&P 500 here, driven in part by an upward revision to second quarter GDP. However, stocks sold off sharply on Friday, setting a slightly negative tone as we start this new week and the new month of September. For the week ending Friday, August 29th, the S&P 500 was down 0.1%, and the Nasdaq Composite and Dow Jones Industrial Average were both down just shy of 0.2% last week. Moving into our economic data from last week, we did get the PCE, personal income spending and savings reports, as well as the PCE inflation report. So looking at personal income, we saw that rise about 0.4% in the month of July, personal spending rising 0.5%, while the personal savings rate was flat at 4.4%. So overall, pretty steady month of consumer momentum in line with expectations and reinforcing some signs of economic stability. With that, we also got the PCE inflation report for the month of July. It showed that headline inflation rose 2.6% from a year ago, while core PCE, which is the Fed's preferred measure of inflation that excludes food and energy, was up 2.9% from a year ago. So flat on that headline number and then rising slightly for core inflation. Headline inflation was up 0.2% month over month, slightly below June's pace, while core inflation was up 0.3%, the same pace as June. So we have seen kind of this re-acceleration of inflation, but it's unknown whether that's going to continue or trend down. A lot of it at play as we consider potential rate cuts in the coming weeks as the Fed meets later on in September. One pretty bright spot of economic data last week, we did get a pretty large upward revision to second quarter GDP growth. So real GDP growth was revised up from 3% up to 3.3% annual growth. This is the fastest pace since the third quarter of 2023. So definitely picking up some economic growth in the second quarter. And we saw the revision reflecting a higher investment amount as well as higher consumer spending, which offset some of this decline in government spending here. So overall, pretty good GDP report for the second quarter. Obviously, it is subject to further revisions in the coming months, but this was a good sign for economic stability. That investment was better than expected, consumer spending better than expected, ultimately leading total economic growth to be slightly better than initially expected. We also got NVIDIA earnings last week for the most recent quarter. They beat expectations on both the top and bottom line. However, you can see the stock fell slightly last week as there was little clarity on operations in China, as this has been a very large potential market for the company, but a lot of political headwinds causing confusion over whether or not they can sell certain products in the country. We also saw that their sales were up 56% from a year ago. However, 39% of the revenue in the most recent quarter was from two customers. So also seeing a lot of concentration risk in their earnings. Still, though, we can see the stock is up nearly 30% year to date as of Friday last week. So it continues to be a major winner in the AI industry. Last but not least, consumer confidence fell slightly in August. Both the present situation and expectations indexes fell a bit, and this was largely due to appraisals of current job availability declining for the eighth consecutive month. Although we did get stronger views of current business conditions offset some of this drop. By age, confidence fell most among those under 35. It was stable for those 35 to 55 and rose slightly for those over 55. Write-in responses showed increased references to tariffs continuing to be tied to higher price worries, and accordingly we saw the consumers' average 12-month inflation expectations rise to 6.2% in August, up from July, but still slightly below the peak of 7% in April when many of the tariffs were first announced. Overall, confidence and consumer sentiment continue to be a pretty weak spot in the economic data, with many of these indexes well below pre-pandemic levels. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.